Hello, thank you so much for joining us. It's another Friday. This is Business Nigeria. Now, these are the stories we are tracking for you at this time. Morocco's inflation rate rises to 1.7% in April as stocks climb dollar near 6 weeks high amid Iran talks uncertainty. Crude oil prices rise as investors doubt breakthrough in U.S.-Iran peace talks. Well, let's jump to our commodities market as always and see what it is looking like this afternoon. Now let's start with gold, silver, copper and platinum. Gold sells for $4,520.60. That's for an ounce, but it's in negative today. That's 0.48 percentage points, 0.67 percentage points for silver, also down 0.51 and is 76.22 percentage points. Copper is $635.90. It's down 6.50 in green, 1.03. Platinum is $1,944.16, 25.13, and it's 1.28 percentage points in red. Well, let's see corn, wheat, cocoa, and cotton. Corn is in green, 0.49%, 2.25, $464.50, while wheat sells for $650 for a metric ton. Cocoa is selling for $3,767 for a metric ton, and you will have to pay $78.72 for a metric ton of cocoa. 0.95% in green, 3.14 in red, 0.39 in green, 0.49 for corn in green. Global markets today all in green. Global stocks rose as the US dollar hovered around its highest levels in over 6 weeks as a great deal of uncertainty surrounded United States-Iran peace talks. Now, MSCI's World Stocks Index rose 0.22%. As it was up 0.43%, that's for Euro stock. Nasdaq futures climbed 0.31%, all lined up here in green. As we move to S&P 500 futures, which also increased by 0.26%. That's it here, while after hitting 7,517.12 last week, that's a fresh record high. But the MSCI's broadest index of Asian Pacific shares outside of Japan gained 2.8%. That's it here, 2.8%. Shying off a new record high led by artificial intelligence related shares. Well, all of the markets today are trading in green, ending the week well in green. But crude oil prices climbed today, but we're on track for a weekly loss as investors doubted the prospect of a breakthrough in U.S.-Iran peace talks. United States West Texas Intermediate crude is selling at $98.84. It's in green, 2.58 percentage points. Brent crude futures sells for $105.08, also in green, 3.10%. Indian basket experienced a decline of 3.07%, selling at $108.09 for a barrel. Now, for the OPEC basket, dealers are offering $115.40. That's for a barrel, and it has a negative margin of 2.29%. Well, thank you so much for staying tuned. Now, analysts and policy experts have backed the Central Bank of Nigeria after the Monetary Policy Committee held the monetary policy rate at 26.5%. At the end of the 305th meeting held on May 19 to 20, describing the decision as a prudent given that the current inflationary pressures are largely supply side and externally driven. The MPC, attended by all 11 members, also retained the asymmetric corridor around MPR at 50 plus 50 and minus 400 basis points, the cash reserve ratio for deposit money banks at 45% and for merchant banks at 16%, and kept the CRR on non-TSA public sector deposits at 75%. Before I continue now, let's take a look at what happened after that very important meeting. Yes, May Monetary Policy Committee meeting. The decisions. MPR was retained at 26.5%. That's after the meeting. CRR retained at 45% for commercial banks, while CRR retained at 16%. That's for merchant banks. 75% for non-TSA public sector deposits. These are the decisions after that meeting. Standard facility corridor, that's retained at also plus 50 minus 450 basis points. that's surrounding the MPR. They also retain their symmetric corridor for around the MPR at plus 500 and minus 100 basis points. Interestingly, let's look at what the central bank governor said specifically. Reforms have significantly improved the economy, that's Nigeria's economy's ability to absorb external shocks. Well, we'll get to know if this is true as we move on in our conversation and what we see on the ground. Let's take a step backwards and see inflation figures. From March to March as of today, negative 15.38%. From April, it is at 15.69%. That's April 2026. That's the latest figure with regards to inflation. But let's go back and see how it's declined before it started to increase. March, 15.38 percentage points. That's for inflation in March. And February was 15.06. That was when the uptick started. There was a decline before now. You will remember after the rebasing exercise that took place early 2025. December 2025, inflation stood at 15.15%. In November, 14.45% was inflation for Nigeria, and October, we had 16.05 percentage points. Now, let's look at gross domestic product as we moved into the year 2026. Now, for 2025 Q4, Nigeria's economy grew at 4.07% year on year. Agriculture recorded 4% from 2.54% in Q4 of 2024. Industry sector made 3.88% from 2.47% in 2023. Let me bring my guests in. Mr. Kenneth Erikume. He is a partner, tax reporting and strategy with PricewaterhouseCoopers. He joins me for this conversation. Mr. Erikume, thank you so much. Good afternoon, and it's good to have you join us on Business Nigeria. Good afternoon, Mr. Erikume. Can you hear me? All right, then we'll still connect with Mr. Erikume and get that to that conversation around it. Now, 2026 macroeconomic outlook. Now, there's been projections and, of course, reprojections with regards to Nigeria's economy, considering what's happening in the Middle East and, of course, reality on ground. Reforms are still being consolidated. And, the likes of IMF and World Bank have said Nigeria must stay the course to get the benefits of this. You will remember also lately that S&P upgraded Nigeria from B- to B, which is also a positive sign showing that there's a bit of stability, or Nigeria is getting to that level of stability, considering the fallout of the reforms being instituted by this administration. Nigeria's economy is projected to expand by 4.49%. That's according to the Central Bank of Nigeria. According to the Nigerian Economic Summit Group, Nigeria's economy is to grow by 5.5% in 2026. That's according to the NESG. World Bank downgraded Nigeria's economic growth, projected 4.1% from 4.4% in 2026 to 2027. Let me ask Mr. Erikume is with us now. Mr. Kenneth Erikume, are you there? Good afternoon.
Good afternoon. How are you doing?
I'm very well. Partner tax reporting and strategy, PricewaterhouseCoopers. Let me allow you to take us through what you make of the decision of the Apex Bank after this very important meeting that we all waited for.
All right. So thanks very much for that, Tolu. I think, the outcome was in line with expectations of many stakeholders, particularly because there was a slight uptick in inflation, within February. So there was an expectation that, and when you see some of the signaling coming from the central bank, that we're going to hold the rates steady, into the future. So it wasn't surprising that that was the outcome. And really, there is obviously the big challenge that we are going into election period, and during the build-up towards election, there will be a lot of spending. There'll be formal spending, and there would also be informal spending. Formal spending relating to incumbents, trying to ensure that they deliver on projects and ensure that their citizenry have a favorable perception of the government. Some of it also has to do with legacy, where you have, the incumbents also trying to leave legacy projects that their constituencies can look back and say, this was what the person left behind. But then there's also the informal bit as well, which we've seen historically. I'm not sure that would happen in this current dispensation, but we've also seen historically that leading up to the elections, there's also quite a lot of informal activity that involves cash. So the maintenance of the exchange rate, the MPR at 26.5% was expected, but it also has a challenge, because what that therefore means is that growth may be impacted adversely while you're dealing with the monetary policy challenge and inflation. So inflation might hold, but then because of the stifling interest rates, the ability of the small and medium-sized businesses to be able to mobilize the necessary capital to expand their business, to do projects, might be hampered. And therefore, it may, the GDP growth, and I saw the statistics that you put up just now, which indicated that different people had their different views, and there was some expectation by certain stakeholders that it could drop. Having said that, the strategy of the central bank remains the same. Consolidate on disinflation, ensure that it is under control. And part of the inflationary pressures in the past was also coming from the FX market. So ensure that there is stability in that market, using the orthodox tools and, clearer signaling to the market, in terms of liquidity. And we've seen that happen consistently. And so I think, it's not unusual, but there's going to be a challenge in terms of growth, because the required capital, especially for the small and mid-sized businesses, would be impacted. I think manufacturing would also continue to see a challenge because of that, because they're capital intensive and they require funding from the banks to be able to do business. So those would be the challenges generally.
I think I thought about that yesterday, talk about the real sector and the challenges that they would face this time, considering the fact that rates are still left unchanged. But let's look at some other issues raised at this gathering. Improved external reserves. We saw a bit of dip at a particular time. Many would say defending the currency and all of that, which cannot be ruled out in any way. We now bounced back to about $49.49 billion. That's also one side. Now, the banking recapitalization exercise, 33 banks successfully completed, went through this process. And that's also a sign of stability, one would say, in the banking sector. I'd like you to react to this development before we move to the S&P upgrade, which I'm sure you would also like to speak around.
Right. Thanks for that highlight, Tolu. Interestingly, I didn't mention that in the opening statement, but clearly, the central bank has been living up to expectations, and a lot of the reforms that have been done since coming through from 2023, we're beginning to see the impact. And I mentioned the FX stability. I mentioned managing inflation, but also, just going back to the FX market, what we've seen in terms of the growth in the foreign reserves, is one of the ways, or one of the indicators or signals to the market that there is liquidity. And when there is liquidity, the potential for people who are trying to take a chance with regards to devaluation of the currency reduces significantly, because if you're betting against the naira, and the central bank has that level of liquidity, you're essentially on your own. So I think that has reduced a lot of the arbitrage and the opportunities, the opportunistic plays that we've seen in the FX market historically. So it's a clear signal, and there's clear credibility that the market is liquid. Now, on the consolidation of the banks, I think that has been coming. So think about it. Many years ago, when the minimum capital requirement was 25 billion, the exchange rate was much lower. And a lot of our banks have also increased their scope and expanded their scope of influence, going into other markets as well, having foreign subsidiaries. So the play here cannot just be local currency. You have to look at the capital requirements from the global currency, which is the US dollar. And so when the central bank came up with the requirements for banks to increase their minimum capital, that did not come as a surprise. But what that is supposed to do is also to drive more expectations in terms of the ability of the banks to play and provide credit to the various sectors that need it, as against taking less risky approaches in the market by putting monies in government securities, which are less risky, but do not contribute well, it contributes massively in terms of driving government and the economy, but in terms of mobilizing the private sector, you need the banks to be able to lend and to be able to recover their loans as required. So that expectation, where we've seen the banks, and solidly, because at this time it's not just the banks going to the markets to seek funding or to raise capital. The insurance companies as well have a deadline for mid this year as well. So there's a lot of movement in the stock market, and not just the stock market, even the private market as well. And it shows you the resilience of the Nigerian domestic capital base, and how it has been able to meet up with some of these requirements, and even geared up for more activity coming from private placements and potentially IPO of the Dangote refinery as well. So overall, I think it's very good for the banking sector. They're able to support the growing expectations of the private sector and the public sector in terms of the economy. But it's a clear signal that our banks are stronger, and they've even expanded into other markets as well, as we've seen with some of our international banks.
Now, global inflation is anticipated to be elevated moving forward, considering what is happening in the Middle East. That is also something to worry about, and the central bank is worried about this. And this could be end up to that dovish rate or dovish move that we saw of the Apex Bank at a particular time. That might change that to the other side. And many are worried. If we continue to have elevated inflation, considering what is happening that is beyond Nigeria, how does that affect us as a country now with regards to the reforms which everyone, of course the vulnerable ones, are still lamenting? So how do we balance things up and start to see the positive trickle down?
Yeah, so that's a difficult one to answer. You can't insulate yourself from what is happening. You really can't, because what has happened in the Middle East has already started impacting us domestically, but even in terms of import of goods and products from the global market. And you know, Tolu, that we are highly dependent on imports as a country. And government therefore has to, and I think one of the drivers of this sustaining the rates in the international market, government has to deal with that inflation, pressure from an inflation side. But we now need to look inwards and look at, what interventions can happen. And this is not just for the central bank. It has to be a consolidated strategy from the government to look at how we can boost harvest and food productivity. So if you're looking at, quick wins, you have to look at the areas where governments can intervene and the masses, the ordinary citizen can feel the impact immediately. So this, for me, would include intervention in terms of production of food, and harvest, the availability of the seeds, fertilizers, and the likes, as well as looking at funding for certain activities that can provide the masses with things like transportation and things like shelter as well. The housing deficit is still a massive challenge, but unfortunately, the intervention has to be targeted because at MPR being sustained at this level, mortgages continue to be quite expensive. So interventions such as the MREF and other interventions to provide affordable housing has to be an important strategy for government. But, the reality is that the world is where it is and there's nothing you can really do about it. Luckily for us, the investments that we have done in the Dangote refinery continues to provide a form of hedge. But we now need to see some other interventions in the refining space as well. And the conversations I know around the concessioning of our refineries continues to be a controversy. But it's not something we can shy away from. We need to look at models where the government can still maintain control, but you bring in the private sector, which brings in required liquidity for government in the first instance, but also provides the technical capacity to run those refineries efficiently and impactfully for the Nigerian people. So those sort of interventions need to happen, in my view, for us to alleviate the pain for the common man. Otherwise, there's nothing you can do to insulate yourself. You just have to look inwards and ensure that you have your strategy to deal with it.
Mr. Kenneth Erikume, I must thank you so much for your time on the program. Partner Tax Reporting and Strategy, PricewaterhouseCoopers, Nigeria. Do enjoy your weekend.
Thank you, Tolu. You too.
All right, then. Well, let's wrap this up now. IMF's projection is 4.1%. Like I said, IMF is, a bit of downgrade with regards to that. But considering what is happening in the Middle East, and is still flexible and not as